Welcome, Arnold. Good to see you. Hopefully the screen it's visible well, right? Yeah, good. So I was just recording on my bigger screen, so I had to change some things, but it looks good. Great. Uh, mm, mm. Welcome, Lise, Christina, Daniel, and Abby. Good to see you guys. Unfortunately, or at least kind of unfortunately, the last stream in 2.5 weeks. But of course, I'm also looking forward to the vacation. But yeah, let's make the last one a good one. And we have some interesting stuff to talk about. Welcome, Krijos as well. With Krijos. Let's wait a little longer and then we get into it. We had some interesting Wyckoff slash just pure market structure swing failure levels. So that's clean to see it play out. I was not watching the chart myself, but I was recording some videos for the Wyckoff stuff, and I had a lot of alerts, so I already knew there is some interesting stuff happening, which was the case. I have not seen what happened with gold. Okay, gold not really interesting, but I saw quickly that Kijos took a long on silver. Yeah, clean. Rounded bottom kind of formation. At a key level, what is it? Yeah, in a high time frame silver remains interesting with it 1, 2. This is that extreme demand POI. We just tapped the original range low, which is always a super nice level to look for your potential third tap in case of model 2, where your extreme demand and your original range low align. But yeah, we should not forget this is low, lower high, low, low, lower high, lower low. So until this breaks to bullish, or you get like a range here, if you get like a new accumulation range here, then that's super clean. Break structure back to bullish, and this could be the low, but yeah, it needs some time. The high time frame, this is super interesting. So let's first go to welcome Slatan as well. When do you leave? I leave tomorrow. I fly at 3 p.m. So I go to 12 p.m. to Schiphol. Then do some beers to survive the long flight. And then tomorrow night I'm in Asia. Okay, so let's go into Bitcoin. We yesterday were watching that local range right here, but price never confirmed that local move. I was watching for potential this as step 1, this is step 2, and then we had that demand POI below for reaction, but price never confirmed anything because we just nuked down. So it was not a local accumulation to be played, but instead price nuked down further, and we finally got the range we were looking at already. The only question was, this was already our low in the making, and we were expecting like the range had to be formed. The only question was, where was it going to happen? Personally, I would have expected the start of liquidity trill to be taken. Oftentimes they want to do that before putting in a high. But right now it seems that this is our high already, and we came back to the mid-range. So from now on, we can look at it just from this new range with some buy side liquidity above and sell side and weekend liquidity below. So pretty clean range to work with. High time frame remains bearish. We can also see like all those anchored VWAPs, they are acting as resistance, and basically all of them are still bearish. So we should not forget the high time frame remains pretty heavy, but we took out a major low So it's not a weird place to start forming a range right here. And it's already telling quite an important story, because if we look at last week's price action, it was just straight down. Right now we go sideways. So depending on what you do here, more bullish is taking the low and then holding and getting some sort of an accumulation, and we can push higher. If you first start distributing again into those VWAPs, then it can get heavy. But yeah, overall pressure is still down, but solid range to work with, and we know how to play them, which is that high probability trades are at the range low and at range high. Preferably sweep them and then look for the reactions. We still have weekend liquidity below, but price yesterday came down aggressively, and it perfectly held at that former daily point of control, which was put in with this strong move higher. So here we have super clean local demand, the imbalance, and it was also daily point of control. And we can see the price stalled there, formed a new range, and we now are rotating. And what we did here was super clean, because you can, let me delete quickly that. It was valid on the 3 hours. So if we look at just structure, which is often still the best, we have an internal downtrend with lower high, and then you can draw your range, and then this is what you want to see. Like price, oh, ignore that. Price took out the range low of this local range, but printed an SFP, so swing failure pattern, which means that the bears here do not have the pressure to make a lower low, because that's what in a downtrend you should expect, is lower high, lower low, but instead they wicked it, buyer step in, and then that's an SFP which held on the 3 hour. And then if you get an internal bullish break, the high that brought you there becomes a targeted high. So we had that SFP. Now let's see if we had an internal bullish boss. We had a clean right here. We can see it on the 30. 15. Five. Yeah, like this move was pretty aggressive. There was not a structure in that move. So then your only level to work with is this market structure level. So we have the SFP. Preferably you see, like maybe there was 2 minute or 1 minute, but it's not, yeah, like even on the 2 minute you don't have any structure. But if you had here like lower high, lower low, and then break that to bullish after printing at SFP, then that's a super clean long trigger. But in this case, there was not really any solid structure to work with. So to confirm the bullish boss, we had to break this. And then we had that move above. Price gave a wick, so it's also a bit nasty. Came back exactly for this demand mitigation, and then pulled up higher. But yeah, entry-wise, hard to trade. If you came back down here, then this was your Model 2 POI. So if you then get a bullish pulse, you could have traded it like a Model 2, which have 1, 2, 3 after the break and then targeted high. But price already went to the high. But it's clean to see the market structure rules in real time and then see them work again. And right now the big question is, because if we look at the 3 hour again, we swing filled our low, we tested our weak targeted high, that has now been taken out. But now the question becomes, do we swing fill that market structure high again? On the 3 hour, in 40 minutes, the candle closes. But if it closes like this, then you technically have a swing failure again. If you then break internal back to bearish again, this low becomes your targeted low again. So gonna be pretty important if price manages to break this structure. If not, then the low becomes a targeted low again. So will be interesting to see there's not really any structure. Let's see. To confirm the boss, because we have high, higher, low, higher, high. So this is your mark structure low. So for a short, yeah, on the 1 minute you have yeah, not even valid. It's an inside candle. So it's hard to confirm it, but you can just watch. If this cannot break above, then it's just potentially a distribution again. 1, 2. And it's pretty significant because if we look at the deviation threshold, it's above there. But if we manage to push above it, then you basically only have buy side liquidity above you. So I think that if price can print, we have new local demand right here. Let's see. Your local bullish trend is now high, high, low, higher, high. So if you come in here and print a higher low, then I would not be surprised if this accelerates pretty quickly back to the weekly high, because we only have easy to sweep liquidity above us. So pretty interesting levels here, but from a clean setup perspective, yeah, it's a bit difficult to find an entry here. Like if we tap into this demand, we can look for reactions, but that's a bit difficult. And we have to keep in mind, this is an internal range at the mid-range of this main range. So oftentimes you can get pretty choppy price action there. But it's funny that we formed this range and directly above there's only buy side liquidity. So break out of this range and go to the range high. And the same is for the range low, where we only have sell side liquidity below. So break below your range low and you go back to your main low. So interesting levels to look at. Although the higher probability levels are, as always, the range extremes. USDT did the exact opposite, in which we had this local accumulation. It was not tradable, but then we had basically high, higher, low, higher, high, higher, low, and then we swing filled our market structure high, in which this is now our market structure low, this red dot. Price swing filled the high, returned to the weak targeted low, which is now taken out. And now the question is, does this close as an SFP again? Then you can get a rotation back to your high again. Or if you fail to do that and break below it, then your internal uptrend is broken to bearish again. And then you only have sell side liquidity right here. So then the low becomes your target. So clean market structure levels. We created supply right here. And on USDT it was cleaner because on BTC we did not have that clean break of structure. But did we had it on? No, we have an internal bearish bulls. And basically two supply zones, right there and right there. So weakness in those levels can be potentially lower high, lower low, and then break structure here. And then a range low can be next. Because this is only sell side liquidity. So I'm gonna set some alerts. Although I think I'm not gonna take new trades, but we can keep an eye on it. Still need to record some examples because always when I start talking, I keep going. So the Wyckoff is going to be a bit longer, but I don't think you guys see that as a problem. So let's see, but overall this is also just a new range. Range high, range low. Now around mid-range. But here we have some clean market structure to look at. Swing fill, now see a swing fill or break. If we get a break, range low is next. Personally, I think it looks pretty strong. But yeah, still, if I want to get an entry, I need one of my models, and that's not what I can have or see here. Let's see the chat. Kijos, yes, it was because of high time frame PY and from a nice 3 drives into sweep. Only scalp though, I don't trust not. Yeah, it's clean. As long as you are in a high time frame PY, and you get low time frame signals like absorption, the 3 drive, stuff like that, you are in a high probability zone because it's a high time frame PY. So then sometimes, yeah, some more risk, just risky trade can work. Welcome, Astro, as well. Then we get a clear distribution here. It could be, but I would be careful with directly looking at it from a distribution perspective. Simply because we don't have solid structure. And if you look at the move in the course, I talk about it constantly, but in the move into your second tap, that tells you a very clear picture. But right here you have high, strong push, high, low, high, high, strong push. But this is pretty strong move into your tap 2. Then you have to be careful with directly looking at it from distribution perspective. Because this can also just be high, low, high, high, breakout, high, low, high, high, and then go for all the liquidity above. So let's see. But for now, it's it's holding in a range. Let's put on some indicators. Yeah, so price also here at the trend, at the bearish trend, rejecting directly from it. So you can see if price manages to push above, then yeah, I'm pretty sure we go to at least 64. But then I think we also take out this, but then towards 65k. As long as we are below, and we close that 3-hour candle as another SFP, yeah, the low could also be targeted again. But for that, we need to break structure back to bearish. Same with Tau. If it holds and makes another push, so much liquidity above. Oh, let me look at Tau. I haven't watched it. Me quickly. Thanks, Abby, for this trade. I took it. I was almost forgot that I was in it till I get my TP. But technically, this is just a clean Model 2. And this is an example of where you want to look for Model 2 and not Model 1. Because the move into your second tap tells you a lot. So if you have like this as a move into your second tap, then you have to be careful because that shows strength. But in this case, you have a, yeah, price is slowly going into that second tap with clean structure. Here you have a super clean bearish break, which then technically confirms this as your deviation and your second tap high. Clear move back in a range, so then you can look for a lower high or a lower low, basically Model 2. And in this case, price came perfectly back for your extreme liquidity and your extreme supply, which both got mitigated there. And then, what was it? On the 3 minutes, you had structure into that move. So very quickly, higher high, higher low, higher high, higher low, higher high, break, back to bearish. That technically confirms this as your third tap, therefore valid invalidation. And also there's nothing above this level. You took extreme liquidity, you mitigated extreme supply. So there's no reason for price to get above this level again. Or it just pushes much higher. So I saw very locally that price broke structure back to bearish, came back in the range, broke structure from left to right in the downside again from here. So I just entered, stop loss, third tap, target range low. And I TP'd it a little before, or at my TP at this extreme liquidity, but eventually took out the low there. So clean one, I was not aware of it, but thanks Abby for the mention. What is Tau doing? Ah, yeah. I was watching for that potential Model 1, but I did not like the place of the range too much, and price was also like this is then the technical one, this is R2, and here we were making tab 3, tab 3, tab 3, but this is pretty clean because this local, this is sign of absorption. Price now broke internal also back to bullish right here, in which it is pretty interesting because it's exactly doing what I was saying. I am only interested if it is super clean, takes out supply, then comes back for the Model 1 in a Model 2, then I'm willing to take it. So right now the super clean supply has been taken out, so that's out of the way. Then above that you only have liquidity into your highs. Technically we are in a confirmed Model 1, so this is our clean invalidation. We are back in the value area, it seems. Yeah, so we are above val and POC. Then the Model 1 in the Model 2 POI. This is our extreme demand. We have a impulsive candle here, which is probably blue. Yeah, oftentimes they like to fill that at least partly. Yeah, depending on how price now comes back, this move up is pretty aggressive. So the only way I want to get in is what I said earlier, the Model 1. This is clean absorption. Now we cleared supply, so if we now get a slow pullback into extreme demand, then this is the Model 1 into the Model 2. And then it's a clean long to the range highs. Stop loss can be below 4 tap if it's a clean bulls. If you want to be safe, you can just use the third tap, which is always the safest, which is 2.5 R. And what do we have above the range? Only liquidity. So from here, at least to here, it's only liquidity. And then price reaches that strong horizontal level, which was the former range low. So maybe if it confirms the Model 1 into Model 2, you can extend it a bit. And it can be pretty crazy trade. So let's see, maybe we can we still get it, but it needs some time. It needs some sideways and then tap, break a structure, and then long it. And why I initially did not really like it because of this supply, and context wise, we have super clean demand down here. So sometimes you have to think like, do they want to accumulate it here if they also have this POI down below? Because market makers are also greedy. Like we always want to see directly moves, but if they see that there is enough liquidity down here, which is often the case if you have super clean demand levels, it's just liquidity for them, then you have to wonder, do they feel FOMO to already push it from here? Or do they think we don't care because we want to take this demand and then from there maybe push it higher? So the only way I want to trade this is if it's too clean, which for me is always the model 1 in a model 2. If it forms that, then I just have to take it. So let's see if we potentially still get it. This is the lowest demand, but you can basically start it from there, in which you take that single print with it. So alert set, then it's just waiting game. BTC, yeah, so far it's just range low, back to range high, sweep range high, potential back in the range. So it's definitely choppy environment, and it's also not a high probability trade zone. So I'm not too eager to get into random trades at this level, because context wise we are in the middle of the range, which is where you only want to trade if it's super clean. So far this is also a swing fill. So that's pretty interesting. Let's see. That don't trade nice Abby and DD very clean. I suck at the model 2, so need to study this one. After watching the videos, you will understand the model 2 better. Nice one. So step 3s were all 1 hour swing failures. Tau. Yeah, this is clean. It's like absorption 3 drive in your third app. It's lovely. Yo, best stream on YouTube. Thank you, HTP. It's good to hear. Okay, I saw you guys talking about Ripple. I have not looked at Ripple in a long time, but I'm curious. Let's search it 4 hour first. Yeah, so this looks heavy. It's around that wick low. We have basically 8 hour demand, which just got tapped. Right there. Yeah, I think that this bit similar as with Dodge yesterday. I think they are all just forming this new range low, range high, and that they are currently in the middle with that demand below. But you guys are probably looking at lower time frame. Supply right here. Remaining demand near the range low. And more refined demand down here. Curious, what are you guys looking at on? You have a 5-minute pulse, but I don't see a clean model. But creating fresh demand, but it's not really a model. or I'm blind. Or are you guys seeing this as the range low? Heavy Druid in the Discord, potential bullish PO3. Let's check it on a different chart. I think I know what you're looking at, but I think context-wise, it's a bit of a weird place to print a bullish PO3 here. Yeah, I don't like these PO3s. PO3s are pretty rare to work out, and if they work out, they do it in super high probability levels. I don't think that this, at the current place, is a high probability environment. Also for the PO3, your target is the opposite side of the range. Here you have super clean supply. Internally, you are also trending down low, lower high, lower low, lower high, lower low. This could be just lower high or lower low. And then seeing the bigger picture, I think that that range formation makes much more sense. And bullish PO3s often don't happen internally within a range where you have demand below you, supply above you. I think the PO3, yeah, it could work, of course, but I don't think it's high probability. I think this is mostly just internal chop, and that it can chop you up before getting more interested at the extremes. But it can always work out, of course. Just personally not super interested in it. But we at AQ of the bigger range. Yes, but at the AQ you don't want to trade. AQ is a no trade zone. Unless it's super clean. But essentially AQ is not what often very choppy. And I've never seen a PO3 in an internal mid-range happen, personally. Like what makes more sense for PO3 is that if you have it, that you do it at an extreme. So if you have a range like this, range low, range high, and you form like here your PO3, that makes much more sense. Where you sweep the low, break structure, but PO3s only happen at extreme levels. And I've never really seen them happen in a existing range. But that's my view. Yeah, so what? Let's have a look at the statistics and at the order flow. First at the order flow. We have the current daily point of control just below us, and that from yesterday above us. Which, if I look at it from this page, this is step 1 potentially, this is step 2 potentially. If you get a 3 drive into that daily point of control and then a bearish boss, it can be clean short. Your room for error is also very small there, because either you reject from a daily point of control, or you take out all that buy side liquidity above and then make new weekly highs. Some open interest increase, but it's not significant. BrighterData. The daily. So the stats. Oh, Daily stats are pretty bullish, as we can see, with only 25% would make a new daily low and 75% would take out the high later. So that is little confluence for the potential bullish idea, where it forms a higher low, makes a new high, and then this is where that daily point of control is resting, where you either reject, or if you flip above, then can get much higher. So this demand will be really key. Form a higher low could give scalping opportunities, but then I have to go to low time frame so we can have a look. Like maybe if you form some sort of a range here, tap into that demand, flip it to bullish while having some sort of return to zone. It can be a scalp long, quickly de-risking, and then just watch what does it do if it goes up. Do we reject here, or if it does not reject, then new weekly highs can be on the table. But the weekly stats, they are pretty bearish since we have a new weekly low on Wednesday. So yeah, like here, they are now updated to the new data, and we made a new weekly low on Wednesday, in which we have our weekly high on Monday. Monday is super strong day to print weekly highs or lows, followed by Tuesday. But we now have weekly high on Monday, weekly low on Wednesday, which makes the high super strong and the low super weak. If you have a high on Monday, then the chance that you hold your weekly low on Wednesday is very, very small. So oftentimes you make new lows later in the week, with the strongest day Friday or Sunday. But if we look at the historical outcomes, there are 394 similar events on a weekly basis where only 17% closed bullish, 83% closed bearish, 75% of the weeks made the low later in the week, and only 8% would take out the high later. So the weekly statistics are just a confluence. Market structure and just price action is always leading, but data doesn't lie, and that would signal that the high is a strong weekly high and that the low is likely to be taken out later in the week. So something to take into account. Are there any questions? Because we have Tao, what explained. If we get that super clean, some sideways price action right now, and then into this and clean bulls, then we technically have a model 1 in a model 2 that has to be taken. However, no strong push up, strong down, doesn't have any structure, so we'll need some time. For BTC, it will be really key if it can print a higher low, and then like this is most likely higher low, then maybe higher high, and this will be the key level. What happens? Reject, and if you get a structure in it, breaker structure, then it can be a model 1 play, similar as gold, for example, yesterday. And really important, if we look at structure, we technically closing it in 7 minutes. It looks like it will be closed bullish. Then you have the exact opposite of what we had at the high, where we swing filled the high, went to the low. Now we swing fill the low again, in which you can technically go back to your high. However, there's no structure beside here to confirm that. So break above that and it's confirmed. But technically that 3-hour SFP looks pretty good. So it will be really key to see what happens here locally. But right now, nothing to trade for me. But it's going to be important. And then let me first look at the chat. Welcome, Astali. Good to see you. I believe Astali is becoming a bit more active soon again. So for the Discord, that's a big win. Astali's charts are wild. Where are you going in Asia? I'm going through Thailand for the 2.5 weeks, together with one of my best friends. For me, the first time to Asia. I've been to the other continents, but never Asia. So I'm really excited to see how I like it. Maybe if I really like it, maybe later I will go there for a longer time. But now it's purely vacation. If Tao breaks level 2 to bullish, but did not mitigate most of fine demand, will you put your stop below the main low or below the level 2 structure low? I always put my stop losses always at Wyckoff lows. So in the case of Tao, the safest to use is this Wyckoff low, because that's technically a model 1 confirmed already, so that's your low. But if price comes down and I want some structure, and it only mitigates this and then breaks structure back to bullish, then in this case I would use this as my invalidation still, because then there's still a reason for price to come lower. If it mitigates also that refined demand and then has a clean break of structure, then there's technically no reason for price to go lower again. So then you can use this as your invalidation, because that's then your Wyckoff model 1 in the model 2, in which this is technically a Wyckoff low, because it had taken out extreme demand. And in this case, this is your upper demand, but extreme demand is your lowest obvious demand in the range. So in this case, that's this lower box. So you can only use that as your invalidation if that lower box is tapped. Price does not always have to take it out, but then you cannot use it as your invalidation. So it can also be that price just fills the fair value gap partly, then breaks. But then I would not, personally, I don't use this as my stop loss then, but this, because I always want to have a Wyckoff as my invalidation, a Wyckoff tap, which can only be validated if it takes extreme demand and then breaks bullish. Yeah, you guys will like this chart. They're super strong. Oh, before I forget it, let me look at hype, of course. Yeah, so hype formed that new range low, range high, took out the low again. We still have liquidity and demand below, which I really like for like if price holds here, it can be that this is our tap 2. But the way that price is coming down here, there's not really clean structure until at least here. So if you break that back to bullish, then I would look at a model 2. But while below that supply, and because we have reasons to go lower, take liquidity and tap demand, I'm more interested in a potential model 1 in that case, where it takes that liquidity, then flips back, and then look at it from a potential 1, 2, 3. But to call it a range, it's also very, very early to call it a range. This is basically all supply. But it's an SFP or not. Yeah, we are swing failing the low. So it can get interesting. Almost equal lows, which is not really extreme demand is down here. Yeah, I think it needs some more time. But a model 1 high time frame would make more sense. Also, if you see this, you only have low, high, direct move down. That can also just be market structure. So I'm not too eager to call it a range just yet. It's technically valid to look at it. But personally, I would like to see maybe more this, then some more time displacement, and then tapping into that demand and that liquidity, and then look at it from 1, 2, 3, back to the highs. I think that is better to than look at potential model 2. Okay, let's quickly look at VLD. I have not looked at it, and then I have to call it end. VLD. Oh, it's in that. Let's see. We had that local accumulation here. And right now we have a new bullish range, similar as what we had here. So we can look to play that similar as the last one, where some of you made that took that long right here into that new high, the model 1 into model 2 accumulation before expansion. Main structure is still bullish because we have technically high, higher low, higher high, higher low, higher high. So this can all just be a higher low for a higher high until proven otherwise. And then I think the plan is really simple. Look at it the same as here. So here we have range high, range low. This one made now a new low. You internally broke structure back to bullish already, in which a model 2 can also take place. Although we have 50-minute demand down here for model 1. But you broke internal back to bullish, so you can also potentially look at a model 2. There is 45-minute demand. Is there also more local? Not really. This demand is getting mitigated already. It can also be a model 2 already. With this, your mitigation. I'm not. Oh. Wrong tool. Very tight volume profile. Mm. I don't know if I like the model 2 that much. I think there's reason for price to take out this demand, in which a model 1 makes more sense. But then maybe if you cover that demand as your invalidation, and then target the high, 2R. I think it can move to the high already, but I would like to give it more, that it becomes obvious. Right now it's not obvious to me. And oftentimes if you are just patient and wait a little longer, then eventually it's obvious and then you want to take advantage of it. But in general, this is a bullish range, similar as what we had here. So here we had the model 1 accumulation into model 2. Main structure is still bullish, so this can also just be a reaccumulation before higher. Preferably model 1, which is a bit cleaner, but technically you already had your tab 2 broke structure back to bullish, so this can also already be your low, and that you from here go back to your highs. But I think it will be really dependent on what BTC does. UCT looks pretty bearish. Maybe they want to close it in the next. Oh, we already closed it. Yeah, so BTC is going for new highs. Oh. Yeah, I think BLD can already go, but I would not personally feel too comfortable now taking it already. To close it off, what Bitcoin is going to do here will be really important. If it breaks above, like either it rejects here because that's the daily point of control, which we just saw on right here. Like this is clear resistance, but if it pushes above, then there's nothing holding it back from new weekly highs. So it will be dependent, but yeah, you have to watch it basically. And the question is, if you expect it to go higher, in my opinion, you cannot enter here because you are at range highs. So you want to see price go down, give market structure confirmation, and then long it. Because so far this is still tab 2, so it can also still come back down. If it gives you a trigger right here in demand, then it's potentially long. But right here you cannot long it, in my opinion, because your invalidation is not clear. Basically, your only real invalidation is this low. But that's obviously not a good RR. But I'm gonna zoom out because this is my last stream. So low time frame, you can play this, but high time frame, I think it's not weird that for the coming weeks, while I'm gone, that this is just our range to watch. Range low, range high. And if we want the high probability trades are there. Deviations above, break back in the range, shorts, take the low, swing fill it, break internal back to bullish, and you can long it. I think that's where you mainly want to focus on. That's on BTC, and it's very similar on USDT, where this is your main range to watch. And this is all very internal. You can play it, but you have to know that you are at your mid-range, so low probability environment. Then I think it's time to close off stream because I've been recording, I think, 2 hours of trade examples. I still want to go over hype and Tao, so that will probably take another hour. So I've been almost streaming or like recording 4 hours. So I want to end this stream quickly, or not quickly, but record the other hour. Then the Wyckoff videos are done, and then I'm finally gonna enjoy a vacation after quite a long time. So all that rests me is to thank all of you for the amazing activity, the activity in the Discord. It's amazing to see. I will write a message, like kind of a thank you message and a goodbye, or not a goodbye, but just for a few weeks. Message later today. Then I will also upload the Wyckoff videos. And yeah, I won't be streaming for the coming 2.5 weeks, but I will still watch the Discord, of course. So everything that's said there, I will see it, and I will from time to time just show some what I see on BTC. I'm not gonna trade myself because I don't want to look and in the back of my mind be busy with trades and stuff. But if I see some interesting things and I feel like, oh, let me share it, I will just share it. But overall, I'm mainly gonna enjoy it. So that's that, and I cannot wait to already be back to pick it up with all of you guys. But I trust you that yeah, you guys will survive. I already have seen some traits of you guys, and it's crazy. So I'm not needed. You can do it without me. So good luck with that. And yeah, all the rest of me is to thank you all, and I will see you guys in the Discord. And in the meantime, I'm gonna definitely enjoy my trip. So thanks a lot, guys, and I'll speak to you in the Discord. Cheers.